Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today, we're going to be talking about Ripple and XRP. But first, I just want to ask, how is everybody's day going? How's everybody's night going? How's everybody's week off to a start? I think that everybody has been fairly excited about the overall market lately. And I just want to say, like, a warning sign ahead. Bitcoin still has been trading at some rough resistance areas at around like the 22.5K zone, and now we're basically breaking down from that area. So just be cautious with that. Don't jump into positions. I always say kind of wait until the buy zones come to you. Don't try to chase an asset just because it is pumping. I've always warned you guys ahead of time with that. But today we're actually going to be talking about a looming financial crisis that's going to be derived from liquidity itself. And I think that this is where XRP really kind of steals the show. We're going to be addressing it. We're going to be talking about it. So let's really kind of discuss this. So first off, if you guys don't know exactly how liquidity works, maybe you don't know how our fundamental banking system works, I think that you should go check out this Liquidity Explained from Ripple. All you have to do is, search up Liquidity Explained Ripple, and it'll break it down. This is from 2018. And yes, they do talk about this is like the Nostril Vostro accounts from like 2016, for an example. This is why, like, fundamentally, I love XRP because, like, when you really kind of look at, like, freeing up that capital that is locked in these Nostril Vostro accounts, that is a very, very fundamental use case that could possibly account for some major ROI on just XRP as a token itself. Remember, Nostril Vostro accounts, I've discussed many times on this channel, as being something to not ignore. They are a $27 trillion market now. They were, at that current moment in time, $5 trillion back in 2016. So you could just see how fast the amount of money that's actually getting locked up in these, accounts is becoming. And also, like, on-demand liquidity as a service from XRP is very fundamental to, like, many use case values, and we are actually going to be discussing why it's so fundamental to have an on-demand liquidity service at this current moment in time. So first off, China. I've just discussed in a video from the other day talking to you guys about China's real estate market crisis. And yes, we are still seeing that becoming a big deal. For an example, we do see to put things in perspective, the Chinese real estate market is the biggest single asset class in the world with an estimated market value of roughly $55 trillion as per December 2021, larger than the U.S. stock market. Chinese real estate output just shrank by 7% year over year in Q2 alone. So yeah, I mean, I think that this is pretty rough. I've discussed to you guys about how this could bleed into other markets, including the U.S. financial markets. But also, we just recently seen China have bank runs, which we also talked about it in regards to, like, China banks basically locking out their customers from, like, withdrawing money from their banks. Like, that is a big deal. This is also telling us, like, what's yet to come around, like, this economic stance that we're basically at currently. And by the way, remember, at the end of this month, we do get a GDP report from the Fed that could possibly confirm that we are in a recession. And if that is the case, things are going to get really rough really fast. But we do see our China adds liquidity for the first time since June as risks grow. PBOC makes net injection amid mortgage boycott, COVID flare-up. Threats to financial system remain high, NatWest Market says. And yes, like, this has also to do with the real estate market there. Again, like, $55 trillion is something to not disregard, especially like in just one market itself. This is a systemic risk currently to continue to watch for because this could get pretty rough. Now, also, we did see Saudi Arabia injects $13 billion in liquidity-starved banks. Central banks places funds as deposits to ease tight liquidity. Banks face unprecedented stress for a period of high oil prices. Yes, liquidity is getting tight globally right now, especially around central banks, as we do kind of face, economic structure integrity basically falling apart. And it really kind of started back in March of 2020 when we did see, like, the printer press in the United States, for an example, really kind of ramping up, and now we are basically pointing the finger, trying to blame other areas for, for an example, inflation. Like, blaming consumers for inflation is probably, like, the biggest laughable joke that I've ever seen around, like, finance and economics. But yeah, we are definitely seeing, like, systemic risk moving around, like, central banks. And we also did see banks need bolder message on liquidity in a crisis. This is Bank of England official says. Usually when they are trying to warn ahead of time around things like this, or calling for more, it's usually going to get a lot worse, in the long term than what they're actually letting on. And we do see here the regulatory messages in support of liquidity buffer usability communicated before and during the pandemic were on their own insufficient to address banks' reluctance to use their, liquid assets. If we would like to change this, we may need to be bolder. One way to proceed would be to, learn from our experiences with capital buffers, kind of more so like talking about like liquid assets in general. I feel that, here we might not have got the balance quite right. Maybe the system is relying a bit more than is appropriate on central banks to jump in super quickly and in size. And yeah, I mean, like right now, by the way, we do see here the Bank of England and other central banks had to inject liquidity into markets at the start of the pandemic because of a dash for cash shrank liquidity. We will also see this happen similar to like 2008, except on a much wider scale. Remember, I've actually discussed the 2008 crisis on this channel before and how I do believe that we have not fully bounced back from that time. In fact, I actually think that we massively inflated markets by not only printing money, but also by hiding statistics. Like remember, like right now, we're seeing, inflation rates, basically being covered up and being made up in regards to like these actual rates. Like, do you honestly believe that inflation is at a 9.1%? Like, it's laughable that they're still trying to, ease the pain of like actual inflation rates. It's so much worse than what they're actually letting on. And talking about like 2008, like, yeah, I don't think that we bounced back officially, and I think that this next major, crash is going to be a lot worse. And yes, I do believe that we still have time before that crash inevitably does happen, but it's going to be sourced through a liquidity crisis, in my opinion. If we do not start moving towards some sort of liquidity solution, we will end up having a repeat of 2008. And we actually do see over here, this is Gregory Manarino, traderschoice.net, warning of a liquidity crisis as the European Central Bank goes into an unlimited bond buying program. Listen closely to this.
To also push off for now an immediate lockup of the system. I'm talking about a liquidity crisis. You understand? Although the world is awash in debt, on an unprecedented scale, there's not enough of it. We have to continue to borrow, and this unlimited bond buying program and wars and crisis to crisis to crisis is all the mechanism to allow that to happen.
And yeah, I mean, like, it's going to happen. Like, I would say that a liquidity crisis is inevitable. Now, I know that a lot of people say, like, I wonder if Ripple could do anything. I mean, as a last resort of sorts. A lot of people really kind of just bring up XRP around this because everybody has known for the longest time that XRP is the source of a liquidity solution. Remember, like I've discussed, is like a global liquidity crisis basically is looming over us. XRP could possibly disrupt the entire system for like, providing on-demand liquidity as a service. And we do see here Ripple and Stellar have been working for a long time to help make the transition and give the markets the liquidity they need to emerge from the crisis. The new financial system is upon us. XRP and XLM are the guardians. And we actually do see down here, like, let me actually open these real quick in a new tab because I know that it is a little bit hard to see. But yes, I've actually talked about like XRP and even XLM. Like XRP is more so like B2B. XLM is like P2P, but we do see settlement through digital assets XRP. The arrangement allows for transacting banks to settle payments using XRP as a digital asset. XRP's reach into exotic corridors and average daily trading volume higher than most exotic currencies makes it an ideal bridge asset for settling transactions between banks. In this arrangement, each bank holds XRP as a fungible liquidity pool that can be used for payments within a number of exotic corridors without the need to hold notional accounts in those currencies. With XRP eliminating the need for banks to have notional accounts or foreign currency exposure, this arrangement is ideal to be used for exotic corridors. And of course, like this is actually breaking the arrangements that we basically utilize on a day-to-day basis in regards to like holding these assets in their notional accounts. I mean, like this is $27 trillion that's just parked there doing nothing. And XRP is unlocking those nostril accounts. And I know that that is like a use case that everybody has heard in the past, but it is something to continue to watch for, especially at times like this. Like this is a major issue currently. And we do see, like, depending on the corridor volume flows, cost of FX and the use case, low value or high value payments, banks can choose a number or between a number of liquidity arrangements to optimize for cost, risk, and capital efficiency. And of course, you do see like the XRP ledger down here, and you do see like all of the banks. We do see like Bank A, XRP Ledger to Bank B. This is basically transacting from Bank A to Bank B utilizing XRP as a liquidity source, as we have outlined multiple times within a lot of XRP videos. And then, of course, like even XLM, liquidity. Stellar connects the world's financial infrastructure by making it easy to issue assets and to use those assets for seamless cross-border payments and cross-border or cross-currency payments as well. Market liquidity, which allows the quick and efficient exchange of assets at stable and transparent prices, is fundamental to the network's success. And like many in the ecosystem, SDF has long understood that fact. To quote our 2021 roadmap, improving liquidity is an essential part of the 2021 growth plan. The ability to efficiently convert assets is what enables varied use cases and actors to interact with one another on Stellar. It's all about liquidity. I even discussed this with like a lot of like the central banks or like enterprises and major financial institutions that will adopt crypto. It's about leveraging liquidity as a service as well as like liquidity in general. Having that option to have a major change within the liquidity area compared to like what we are used to seeing on a day-to-day basis. Like imagine having, like the best way that I could describe this is imagine having like over $5 trillion, right, in a bank account that you cannot touch at all. Okay? And it's just sitting there doing absolutely nothing. Now, what if I told you that I'm going to create that same exact bank account, okay, and the money's going to be there when you need it instead of it all being locked up? Like, it will basically free up that $5 trillion that's there in that one bank account, and instead of it just sitting there doing nothing, now you have the the opportunity to utilize that money for anything, all but while still again sourcing liquidity as a service whenever you need it. Like that's how big of a use case XRP actually is. And that's why like even going back to like this 2018 article, it really kind of breaks down exactly why this is such a fundamental use case compared to like what we are used to seeing on a day-to-day basis. Like this is not only unlocking efficiencies around payments in general, but it's also freeing up so much capital that I still don't believe that like a lot of people are really kind of realizing the value behind that itself. Like there's nothing like that out there. But also remember, like the traditional system is broken. We've actually seen a lot of things happening around like inflation from the United States with other areas around the world. For an example, like there's been a lot of banks and financial institutions pulling out of the traditional SWIFT network simply because of not only inflation, but it's just like, what area wants to have like the United States in control, bringing in sanctions around their payments, locking them out of the banking sector. Like that is something that any area would want to be out of. That's also why I do believe that like centralized payment networks and things like that are not going to succeed long term. And I'm not saying like RippleNet is not centralized. No, I'm not saying that at all. I just believe that like there's going to be other solutions out there for these major areas to utilize, and they have already started to look into them. Hence why we are seeing CBDCs becoming such a popular area to focus on, because it allows them to take a step back and disconnect fully from a United States driven and focused reserve currency. We need to get rid of a reserve currency in general and pretty much kind of move away from that and have our own currency per country, which we are basically getting to with CBDCs. So I do think that the new system is going to be ushered in. I do believe that when we really kind of look at like a liquidity crisis itself, we will be seeing that eventually. I mean, the spending, the debt itself it's just at an astronomical area that it's too far to even turn around now. And I think that this is not going to look good in like a year or maybe even 2 years, right? Because we always say like we're a recession kind of lags behind. I would say by 2023 to 2024, that's like the true area to focus on in terms of like a major crashing point, which is why I've always said like we still have time in this market to really kind of make a ton of money before that actually does happen. But with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.